If you open the stock market today and you probably will scanning the charts, probably scanning indexes, and you're probably wondering right now, is the downturn ended? Is there any more downturn remaining? The market rallied today a huge amount, and this is unusual from such a stream of down days that we've had recently. So let's analyze this market further and see, is this the end of the bear market per se, or is there some good momentum coming up? And let's look into this further and analyze this market to see what's in store for the coming week. So I'm going to start with the daily chart. This is the daily chart of the S&P 500. And as you can see, we've rallied a lot since the bottom around 3640. So the market's rallied to 3,764. At an intraday level, this was at around 3,784. So me too, I was in the stock market today as the day progressed. But if you notice the end of day, and this is the time of the recording, this is after market hours, you've seen that the market's taking a little bit of a breather from the big up rally that it's seen here. So what does that mean? Does it mean that the market's heading down further? Is the market going to go up? So in order to give you a little more perspective, I want to first put your attention towards the 4-hour time frame, because that gives you a better picture of what just happened. So the market went down. This is, and again, I do not go below the 4 hours. 4 hours is the lowest that I like to go to, because I look at trading between an intraday basis, but not a day trading basis. And that's, I believe, a too short of a time frame if you're trying to trade the 15 minutes, the 10 minutes. And people are successful, but in my perception, in my view, I feel that anything 4 hours and above is tradable long term for a profitable trade. Again, it's up to you, but that's just my 2 cents on how I like to do it. So back to this 4-hour time frame. As you can see, the market did bounce down. It then went closer to the 20-period moving average line, bounced down again. It was again in no man's territory, and now it started rallying closer to the moving average line, which is a 20-period, and this is the purple line, which is the 50-period moving average line. So the market's kind of like going back to its mean or its center point, and that's what it's doing here. Now, an interesting thing is, though the market is closer to its mean or center point, there has been a slight downturn now in no man's land. And you're probably wondering what caused the market to just like flip on its side in the middle of two different supports and resistances. Because generally the market would turn towards the 50-period moving average line or the 20-period moving average line. So it so happens, and this was like me baffled, this day, today afternoon itself, wondering like what caused this like sudden pivot in the middle. And it so happens that so this is like using TradingView as a platform, and it's a free data source. There are a few other subscription-based data sources that I have for my personal trading account as well, which did have the 50-period moving average line touch at this level. So the 50-period moving average line touched at around the 3781. So this purple line that you see here, I'll zoom in further. This purple line was actually around this level, and that's what caused it to touch it intraday and then kind of turn towards the downtrend from there. So that's basically what happened. So if you are wondering what is this big gap, some of your trading charts would indicate this at around the 3800 mark. Some would say it's the 3181.84 mark. And that's basically where it is right now. And the reason why it's not aggressively moving to, a lot of times you would see, even though different trading platforms, and we have such a diverse group of traders, not everyone's following the same charts. But the reason why it's so cautious on these lines is that even if it's so close, it's like, you're playing a relay race, and you're so afraid of going and just kind of basing yourself in the enemy's territory, and the enemy being the bull market right now. It's trying to just touch it and go and run in the opposite direction, and that's what's happening here. So to kind of summarize, what's happened is that it's touched the 50 period moving average line on the 4-hour time frame, and now it's taking a break. It's taking a respite from like, just going all the way up, and now like, okay, trying to consolidate somewhere here. Now, there could be a possibility that it either comes back to the yellow, which is the 20 period moving average line, that's the 738, and then try to rally up from here. Or it may then say, doesn't have enough steam. If there is any negative news that may come, the market may tend to head towards this line. But I do feel that that's too unlikely at this stage, and the reason being that the market's so fanned out. It doesn't really tend to stay so fanned out. When I mean fanned out, I mean it's so far away on the daily time frame from the moving average line. So again, the 4-hour time frame is more of like an intra-day or a day's time frame, but the daily time frame is where a lot of the traders go by. So the market will tend to gravitate towards this line. So there is still, it has to still move up a little more, just like it did here. It kind of like has to gravitate towards the, and it may kind of like fluctuate, just kind of go into a very range bound pattern for a while before it decides that, okay, and what would that do is also it would kind of like as this is the moving average, and average means it's like an average of the recent price patterns, and this is the EMA that I use here. So there is a greater tendency that the market averages out on the nearest or the recent price pattern. So that's what happened. So this line will kind of like move closer towards this line and may kind of like touch base here, and as soon as it touches, you'll see a direction either up or the down. So that's just like where it is right now. I do have a gut feeling that there is still time before it has to touch the line, just like it did. In this case, it went all the way up to the purple line. But something like this, so you can see it dropped. It's so far away from the yellow, which is the 20p moving average line, and then it took some time. It bounced around. It went down as well, but it could not go down further because, like, again, it does, hold its rules or principles that it has to be closer to the 20p moving average line. So that's what it did, and now it's trying to head closer to it. So same thing here, it's going to kind of either consolidate in this area and then try to touch it. And as soon as it touches it or comes close to it, you will see a direction or a trend change in the market. So do keep your eyes on that. Before I end, I just want to go closer to the weekly time frame. Today is Wednesday, so we're kind of midway during the week. So the week has seen an upward trend. So this is another sign that the market may have some upward positive momentum in store for it. And the reason why I claim that to be the case is that there is a huge support. Even though it touched it intra-day, it seems to have found a base, and that's where it's trying to hold up. So that could possibly happen, just like as you see here, the market kind of like rallied and then it took a plunge to the bottom. So the market may kind of like bounce or hover around this 200 period moving average right now. Keep in mind, let me just go back and show you how important is this 200 period moving average line. So I'll go back. This was like a mini, I wouldn't say a recession, but a mini correction in 2019. The market touched this and then bounced back. So I'm not guaranteeing that will happen. The market may at an intraday basis pierce through it and then come back. But this is where it's found momentum, or a base. So the market may, so this is where it touched, it didn't touch it here on the first range. Let me just go zoom in a little. It didn't touch it on the first range, but it has to touch it. And that's where you could kind of have a confirmation. This was a unique case, and this is the March 2020, and it kind of like pierced all the way down. But I think when I touch the monthly very soon, it'll give you a better picture of where that is. So this is another example. So I'm giving you examples in history, and this is how you would confirm or attest that there is some I guess truth to the sorcery of like, okay, why is it touching and like, kind of like bouncing out of it? The traders do follow this history and like, lessons that the market has, and it's to give it to you in like simple terms. It's like when a cat gets a treat for the first time and you give it to him or a dog, give it to them at a certain time and do a certain ritual while doing it, the cats get accustomed to it. So every time you do that ritual, the cat will react in the same way. Similarly, traders, not comparing you with cats and dogs, but will also react just the same way that, based on previous patterns, and they're just kind of like trying to replicate that. So this is another instance, 2016. Let's see if I can give you another example. This is again, we kind of like, hovered around the 200 period moving average line a few times before we decided to come back, bounce back, and go there. This is and this is where there was like a big downtrend. So keep in mind, this is the 2009 crash. So if you look at Goldman Sachs, and this is like, I think the article came out yesterday or today. Do Google it. I won't pull it up right now just to keep the video short. Goldman Sachs did mention that the rally could last the end of the year. Now, I'm not saying that that's a true prediction. It could not. But what I would like to say is that if it does break below the 200p moving average line, there is all hell can break loose. So how much would it break loose? I'll just quickly go to the monthly chart to tell you where exactly. But for now, I would say there is some respite because this is like a strong line in terms of support. And a lot of the long-term traders that have been trading, imagine you were a long-term trader and you kind of like shorted the market somewhere over here. You've probably got a lot of gains. Like you've probably been a millionaire now, depending on the quantity and size that you've traded. So this is provided you shorted the market. Now, if you were on the buy side, you would have probably been less of a millionaire than you were before. So, it goes both ways. So this is where it is right now. It's kind of like, taking support. So I do feel, and again, I'm not a predictor of the fate of the market. I'm just giving you an educational guess. I do feel that the market may kind of like head a little higher towards the yellow line. It's too far extended. A lot of the other investors would say the market is in an oversold condition right now and it needs to breathe a little or consolidate a little or rest a little before it can plunge below or plunge lower. So that's just my take. Now, another important thing to keep in mind, so that's where I said, remember in the previous weekly chart, I said how much would the market fall if it has to. So if the market falls, I think this is too positive of a touch. The market will pierce it lower. And if it pierces it lower, how much would it pierce? It would touch this particular 50p moving average line, just like it did here. Just like it did over here, it touched it almost touched it and then bounced back. So I feel that the market, if it touches this, it'll touch it, pierce it, and then bounce back because there's so much of negativity or so much of bareness in the market. It'll pierce it deeply and then come back. In terms of like the 50 period moving average line, I would like you to check your own charts because there seems to be some discrepancies between paid and the free sources, and I don't think it applies for everyone, but just keep an eye out on this line on the monthly chart. That's where the market is heading to touch, because the market doesn't like being in this kind of like sweet spot and be like, okay, I'm going to move higher now. It will pierce this sometime. Maybe this month, or it may just open up a new candle and then pierce it and then come back. We don't know. Time will tell that. So I hope this was helpful. I will again summarize as to say that the market may just breathe a little more on the upside. I don't know if it'll kind of like hover. Now, being such a positive high day, the market may tend to kind of like consolidate a little bit before it stretches its wings upper or lower. But yeah, it has to kind of like go closer to this yellow line before it decides. So stay tuned. Tomorrow I might give you another update and tell you more about what is in store in this particular sorcery that's happening with moving averages. And it's kind of like a revelation if you've never been introduced to it or know what this is. It's like, how is the market being so in line with these two just moving average lines? Like, why does it have so much of control and power? Now, it's not just that. There's a lot of fundamentals too, and like fundamentals will decide where the market goes, but the technicals or just these moving averages will decide where does it press the brakes or where does it press the accelerator. So that's like, how you could judge or decide where that goes. So again, I hope this was helpful. Do send me a like if you like what I'm sharing with you. Again, this is short and sweet, and I'm trying to educate you on what is in store in the market for tomorrow. And happy trading to you. I hope you make some money if you're a short seller, or if you're in the positive side to buy stocks. Hope you make some money in this difficult times. And I wish you all the best in your trading journey. And I'll stay tuned to share you some more tips as the week progresses.